Well, thanks for joining us on a Friday. I'm Marlin Bohling with you. Hope you're having a good day today. We're going to take a look at some overnight export business reported by USDA this morning. And that came out actually before the markets even opened up. So we had some sales. They were earmarked for China. And this time around, we had outright sales mentioned in the amount of 312,000 metric tons. And they were earmarked for delivery in the new crop marketing year, 2018 and 2019. So they did not bother with the old crop sales. Remember, we had some cancellations here about a week or week and a half ago. Now, on the other hand, we also had another sale to China of soybeans, and it was for 165,000 tons. Also for the new crop marketing year. However, that one has that stipulation that it's optional origin, so they could get it from us, they could get it from somewhere else, perhaps Brazil, perhaps Argentina. So who knows, but that is a pending potential sale there as well. Let's go to the trading floor and find out what's going on direct from the source. And let's go visit with Scott Gecas. And he joins us now from the perch at the edge of the trading floor at the CME Group. He's with Longleaf Trading. How you doing there, Scott?
I'm doing fantastic. How are you?
I'm doing fine, and everybody looking forward to the weekend here. Tell me what the traders are talking about, if there's any left on the trading floor today.
Yeah, well, that's the thing. There is no traders left. Everyone's gone. Just due to the market holiday, coming up on Monday, you've seen volume die off, very steadily yesterday. Today, there's hardly anything moving around. The summer volume for what we've been watching has started about 3 weeks early. So you're seeing a lot less volume, a lot of less people in and out of these markets. Today, it's anemic. There's nothing going on. After the open, you've seen the volume just pretty much die. So the only thing that we're really watching today as making any news is just all the stuff with oil, OPEC and Russia trying to ramp up production. That's why you see the big slide in oil today. But as far as the grain goes, we're going to stay with soybeans. They had that big sell-off on yesterday, due to all the big cancellations. It is still staying steady I expect the price to stay relatively stable until we figure out what's going on with this, the whole Chinese thing going on. And we're going to stay bullish above 1040.
I'm glad you brought that up about the oil market. We can take a look at that as well here. The West Texas Intermediate crude, boy, it is making a big move today, and it's to the downside. Currently down over $3 a barrel on July. We're trading 304 lower at 67.67 per barrel after posting a high early today of 70.80. Now, on the heating oil side, of course, that's how they derive their prices for diesel fuel. We have June now trading about 5.5 cents lower per gallon at 221.1. Sometimes that can have a spillover impact on the corn market, and as we look at the corn, as you mentioned, it's been kind of a slow day today, but it's maintaining small gains. July corn 1.5 pennies higher at 405 3/4, and December new crop now 1 3/4 higher at 424 1/4. On the soybean side of the ledger, we currently have July now trading 6 3/4 higher at 1042 1/2, and we have November up 7 at 1054 1/2, just a penny from our high of the day there. And if we look at the wheat trade, the wheat has had double-digit gains at times today. We have July Chicago wheat now up 10 3/4 at 541. Currently, you have your Kansas City wheat on that July contract also higher by 12 1/4, now 12.5 cents higher at 561 1/2. And just 2 ticks off of its high of the day. Minneapolis wheat on the July contract, it's now trading at 643 3/4. That's up 9 cents. And if you look at the cotton market today, the nearby July is currently trading 86 points higher at 88.32. And we have December new crop now 82 higher at 86.37 per pound. So big moves in the cotton market once again after a big reversal earlier a few days ago. Let's pause for a quick little break right here, Scott, and then we'll come back and we'll analyze the latest market reaction to the cattle and feed numbers, if any, and we'll talk about it when we come back. We're talking right now with Scott Gecas of Longleaf Trading. He is at the edge of the trading floor in Chicago. And Scott, of course, right now we're kind of building the market reaction to the USDA cattle on feed report. I'm looking at the numbers here, and when you compare the actual USDA on feed numbers compared to the average trade guess, there just is hardly any daylight between the two. If anything, the placement number at 92% was almost a full point higher than what the trade expected. Marketings were about 6 points higher than what they were a year ago, but I did read somewhere where they made the point, and it's a good point, that about half of that is just because they had one more day in April compared to a year ago.
Yeah, that feed placement number, that was one of the things that we were really focusing on. A lot of people in the option market was actually pricing in a lower level than that 91%. So because it did came in higher, it takes away a lot of the volatility that was, built up until today. So you did see that little bit of a volatility crush come into play. Not necessarily a move in the underlying, but the volatility crush definitely did come into play. They're expecting that seasonal demand to really peak here in the next week or two. But I don't know about you guys. I mean, when I was going looking for, beef and pork, over the last weekend for this weekend, I was having a hard time finding anything. All the meat cases, they were all empty. They were all gone. So, it's really hard to play with that supply-demand issue there.
All right, let's take a look at our current futures trade. We were kind of flat coming out of the report, and let's see what we're doing right now. Of course, a lot of folks wondering if we'll actually see the cash cattle market finally ramp up now that the report is out. And I did see where we had some bids come in between 108 and 110 out in the country now. It looks like rest bases about 175 to 179 are being bid. Don't see any sales taking place yet, but June live cattle have softened up a little bit now from last half hour. We're down 25 at 104.15. And we have August live cattle now down 38 at 101.40. Meanwhile, October down 20 at 105.05. So no big shakes there. I mean, we are lower, but not by a lot. Meanwhile, on the feeder cattle side, let's take a look at these prices where we have August now down just a dime at 143.20. September down 32 at 142.78. October 38 lower at 142.82. So is this just a case of everybody had already pretty much squared everything up ahead of the weekend and got neutral before the neutral report came out, Scott?
Yeah, I think you definitely seen that going in, and that's another reason why you've seen the volume completely just disappear. Below this 104 level, is a key level that we've been watching. So because we have been breaking that 104 level pretty consistently, I expect it to test around 102, if not a little bit lower.
All right, on the lean hog trade, let's take a look at our current futures market here. And it was odd because we had the June going lower. All the others are higher. June still down 62, but July 37 higher at 77.15. Why the divergence there? Why are they picking on the June contract there?
Yeah, I mean, that's one of the things that we were definitely watching today. I mean, they're trading at about a 600-point premium versus a 5-year average of only 280-point premium. So that's very significant. I think that balance is starting to come back into play, and that's why you're seeing that divergence right there.
Interesting stuff. All right, a quick look at our beef cutout values that came out at midday as well, and the pork cutout values. The choice beef cuts were down $1.59 today. We had the select cuts going down 4 cents today, and the pork cutout values on the carcasses were actually up 78 cents today, while the bellies were down 41. Scott, thanks for all the information. I appreciate it. Have a great weekend, sir.
Thank you. You too.
Scott Gecas of Long Leaf Trading in Chicago.